favorite trading influencer with $2 million in prop firm payouts is not a better trader than you. He's a better businessman. Mathematically, he's actually worse. And I can prove it with one number. Risk-adjusted return. $1,000 in prop firm fees turned into $66,000 in payouts. That's the ratio I'm running right now with FTMO. And I haven't bought a new challenge in months. Compare that to the guy you follow. $500,000 in challenges spent. $3 million in payouts. Sounds bigger, sounds more impressive. It's not. Skill-wise, there is zero difference. And after this video, you'll understand exactly why the industry doesn't want you to see this math. This is the only prop firm trader in history with this ratio of winnings versus expenses. And I'm going to show you exactly how the lie works. A few weeks ago, I ran an experiment. I posted a payout certificate. Just numbers. The ROI was insane. Almost nobody engaged. Then I posted the same content with a Porsche Cayenne Turbo on top of the certificate. Same numbers, same ROI, different reaction. The post exploded. I'm not exaggerating when I say I don't understand the human mind sometimes. A car can be rented, leased, or borrowed for a photo shoot. A 13.6 times return on investment with FTMO cannot. But the human brain doesn't care about ratios. It only cares about dollar amounts and shiny objects. That's the entire business model of every guru in this industry. They are not selling you trading. They are selling you a feeling. The feeling that big dollar numbers equal skill. And your brain accepts it without doing a single calculation. Game theory has a name for this. It's called a signaling game. The person sending the signal, in this case the influencer with the Porsche, the $2 million screenshot, the Lambo rental knows you cannot verify the underlying skill. He knows you can only see the visible signal. So he picks the most expensive, most visible signal he can afford. And the math behind why he can afford it is the most important part of this video. Let me make this simple. You see two traders. Trader A spent $1,000 in challenges and made $66,000. Trader B spent $500,000 in challenges and made $3 million. Your brain immediately says Trader B is better. He made more money. He must be more skilled. Do the math. Trader A, 66-to-1 ratio, 6,500% return on capital spent. Trader B, 6-to-1 ratio, 500% return on capital spent. Trader A is 13 times more efficient. Same demo capital, same prop firms, same rules. He just spent less to extract more. In finance, there's a concept called risk-adjusted return. Sharpe ratio is the most famous version of it. It's the return divided by the risk you took to get there. Every single hedge fund on earth is judged by this number, not by the absolute dollars. But the trading industry skips this step on purpose. Because if you actually looked at the ratio, 90% of the influencers you follow would look terrible. Same skill, completely different bank account on the way to those payouts. And here's where the institutional argument falls apart too. A real hedge fund manages real client capital. When they grow to $10 billion, they physically cannot make 100% per year. The markets are not deep enough to absorb their orders. They hit capacity constraints. The size itself becomes the enemy. Prop firms are different. It's simulated capital. There is no capacity constraint. There is no market impact. There is no liquidity issue. That means absolute size is not a flex. The only thing that proves skill is the ratio. If you cannot beat 13-to-1 on demo capital with infinite scale, you do not have an edge. You have a marketing budget. Now here's the part nobody is honest about. The reason your favorite influencer can afford to spend $500,000 on challenges is not because he's reckless. It's because mathematically, it's the right business decision for him. I know what a premium community looks like from the inside. I run one. I know what the affiliate revenue looks like. I know what live streaming the journey does for the funnel. His monthly income from the community and the affiliate links is bigger than the monthly income from the trading itself. So if every $50,000 he spends on challenges brings him a viral payout post, and that viral post brings 10 new members at $200 a month, and those members stay 6 months on average, that's $12,000 in lifetime revenue from one post. He's not losing money on challenges. He's spending money on marketing, and the screenshot of the $50,000 payout is the ad creative. This is why they post the Porsche and flashy watches. This is why they live stream and post their faces. This is why the dollar amounts keep getting bigger. The signal has to keep escalating because the audience keeps adapting. It's not trading, it's content. The trading is the cost of producing the content. I'm not even mad about this. From a pure game theory standpoint, it's a rational strategy. If your real revenue source is the community, you will optimize for what grows the community. That's how repeated games work. Every move is for the next round, not for the current round. The lie is when they tell you the screenshot represents skill. It doesn't. It represents a marketing budget. Here's the part where it actually matters. A Porsche can be rented. A screenshot can be edited. A payout can be lucky. An equity curve can be cherry-picked. None of those things are durable. But there are things I've built in the last 6 months that you literally cannot fake. Things that I share with members on my private Discord. Link in the description. 23 automated strategies across MT5, NinjaTrader 8, and TradingView. Verified track record, not screenshots. Live deployment. Quant-Pro, a portfolio simulator that tracks every payout, every expense, every fee across every prop firm. It tells you within minutes whether a firm's current rule set is even mathematically possible to beat. I call it the prop firm's nightmare because it shows you everything they don't want you to see. A doppelganger AI trained on 3,000 of my own messages and tweets, running on Opus 4.7. Better memory than I have, answering questions from VIP members fully autonomously while I sleep. Built on the Carpathy framework, stored in an Obsidian vault. Scaling potential is infinite from here. A 64-mission course that tracks every member's progress and sends them a message if they get stuck. Same quantitative approach I use in trading. Positive expected value, negative expected value, applied to learning. Autonomous backtesting bridges for MT5 and NinjaTrader 8. I describe what I want and the agent's code, compile, debug, and deploy. A meta EA framework for multi-strategy deployment. One of my premium moderators just hit top 3 in the Darwinia Silver competition with it, top 0.03% globally. Compare that to a guru renting a car for a photo shoot. There is no comparison. You can't rent any of this. You can't fake any of this. And the crazy part is, the work itself keeps me printing every single month because I have to keep up with the members. Last year, I probably had 3 or 4 months of real work. Now it's 12 months a year. The members push you. The system pushes you. That's what beating them at their own game looks like. While the gurus are flexing rentals, the actual math of the prop firm industry has been shifting. 96.5% of prop firm traders lose money. That's not a guess. That's the real distribution. The remaining 3.5% are either break-even or actively gamifying the firms. That's what's forcing the firms to constantly change the rules. The Apex legacy model versus the current model is not the same game anymore. Same strategy, 30,000 simulated trades, profitable on paper, but the payout structure has been mathematically reshaped to favor the firm. Is there still edge? Probably. Is it the same edge as before? Not even close. We ran the math on every major firm. Right now, CFD firms are actually beating futures firms on a risk-adjusted basis. That's how brutal the futures rule changes have been. No. This is not based on feelings. We simulated profitable strategies on top of each firm's payout structure, rule set, and real probabilities. The result is the dashboard. If you can't pass in one day anymore because they've added 1,000 rules, it's simply not worth it, despite what every influencer in your timeline is telling you. Long-term thinking is missing from this entire industry. The average ICT trader is thinking about what's going to happen tomorrow. That's why China is becoming an empire, and most Western economies are not. They think in decades, not in a single mandate. You can do the same thing in trading. $10,000 in Darwin X profit from $500. That's 20 times already. It can become 100 times with scaling, but it takes time. It takes uncorrelated strategies. It takes actually using your brain instead of throwing darts at the market, and it's mutually beneficial. The investors get uncorrelated alpha. You get paid. Win-win for both parties, which is the opposite of the zero-sum dynamic the prop firms are forced into. Risk-adjusted return is the only honest metric in trading. When you see a screenshot next time, ask one question. How much did he spend to get there? If he spent $500,000 to make $3 million, that's a 6-to-1 ratio. If I spent $1,000 to make $66,000, that's a 66-to-1 ratio. Same demo capital, same firms, same rules. There is no capacity constraint that makes his ratio harder. The bigger number is not the better trader, it's the better marketer. Understanding is what creates psychology, not meditation, not eating healthy, not the 1,000 other things gurus sell you. Understanding the game you are playing, understanding the participants, understanding the incentives. Once you see the signaling game, you can't unsee it. And the math doesn't care about Porsches. Show me one trading influencer with a verified ratio above 13-to-1. I'll wait. Don't forget to subscribe and let me know in the comments what videos you'd like to see next.